webinar. Okay, let's start. Okay, so few slides are repetitive. If you have attended the webinar before, then you know what I'm going to talk. Then the charts changes. So first few slides are about, so we'll talk about last week's stocks and the coming week's stocks, today's stocks. So we'll go through that, and then the second topic is conditional order. So if you're not aware of conditional order, then it's important that you know if you trade options. So how professionals make money in stock market. So when I started trading or learning, I always wondered that how the big boys, they make money in the stock market. Not like retail traders who are always late in the market. They buy at the top or they sell at the bottom. Like I receive private email that should I short EFX, buy puts on EFX. EFX has already gone down tremendously. So time is over for puts. Now look for entry to the upside. So this is where retail traders make mistake. They are still looking to short EFX, whereas the stock will refuse to go down, and then they will wonder why the stock is refusing to go down. Any bad news will come, it won't go down, it will go up. So I have not prepared the chart of EFX. If you look at the EFX chart, I'm talking about Equifax, it has bottoms 4 or 5 days ago. So now it's going through the bottoming phase and it will rise. So that's where the professionals make money. They buy at the bottom, they lay low, and then some news comes out, and then the stock makes a move up. The guys who are short, they start to cover their shorts, or they think it's opportunity to buy more puts or short the stock. Then the stock goes up because deep pocket keep buying, and then the retail traders, they keep losing. So EFX is one example. Another thing is that we say that all news are reflected in the price of the stock. So it is true to some extent, but not always true. So there are insiders who know about the news, coming news, which is not known to retail traders, to the general public. So I give you example. About 2 weeks ago, these cyber security stocks, they were coming up on my radar. So we bought FireEye, we went long. There was no news on FireEye, and we went long, and the stock did nothing for a few days. Then Equifax news came and FireEye jumped. So the person who was buying FireEye knew about it, that there is a news on Equifax. Maybe he knew about that too. So he was shorting that and going long on FireEye. So he must have made a lot of money, because when the news came for Equifax, the cybersecurity stocks were moving up like crazy. So this was not known. But if you can detect through chart patterns, through your analysis, then you can trade the stocks before the stock makes the move. So you position yourself. So that's what I do. And the way you can do it, you can master a few chart patterns and then just repeat it. So like Bruce Lee said, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So all you need to do is practice few chart patterns, few setups, and when you see the setup, you have conviction, and then you get in. You understand what would happen that will tell you that you are wrong and where you will exit. So if you practice few chart patterns, you just repeat it. Another mistake people do, they trade based on the news on CNBC or on Facebook posting. They are not prepared. So you have to prepare before you come to the market. So you have to have a selected stock. So every day I have a selected stocks. I have a basket of 500 stocks, and then I have a 40-50 stocks for the whole week, and I put it on my watch list. And when the market opens, I'm on one hand I'm watching the open position, and on the other hand I'm watching those which are in my baskets. I'm just focused on those 40-50, because out of 40-50 there has to be one stock which is proving itself in the morning that it's doing what you think it will do. So like today, McDonald's I think fell a few days ago. It fell on earning or some news. So I put it on my radar. I didn't go short, but then I put it on radar to say, okay, when I can go long. So for 4-5 days, McDonald's went on the sideway. Today was the day McDonald's started moving, because I knew for last 1 week I was watching it. So when the stock makes a move, then I'm ready to get in. So you have to prepare, not like, okay, it's somebody's discussing on CNBC, or somebody mentioned on Facebook, or somebody's said something, or Kramer mentioned it. It's not the way to trade. Another thing is you need to master a few techniques which produce fast and high return. So the stock needs to move quickly in our direction and need to move enough to give us a profit. So at least 3% to 5%, between 3 to 5%, the stock should move in our favor. So when you combine the move in the stock with the option, then the return is quite higher, 40 to 80 to 100%. Like today, Halliburton, we bought the call for 25 cents last week, sold some 50 cents. And Halliburton is an oil stock. So other oil stocks were moving also a few days ago. So how I traded, I watched the crude, and I saw the crude is moving, and some selected crude stocks were moving, so I had to make a decision between SLB, EOG, CVX, HAL. So I chose HAL, and it's 100% return. So sometimes you have to see if the stock is related to commodity, then you have to look at the commodity also. Then you decide. So when the stock moves fast, 3 to 5%, the option move 50 to 100%. It depends how fast the stock moves. So I have few strategies. Some of these are listed here. One is a breakout strategy. So I'm looking for the stocks which are breaking out. So when the stocks are breaking out and you get in, there is a momentum behind, but you have to time your entry correctly on a breakout stocks. Breakout above the resistance, a strong resistance is more powerful than just a minor resistance. So if the stock is bumping its head on some resistance and is unable to break it, but suddenly it breaks with volume, then the move will come for next 2-3 days. Then another one is the breakout reversal strategy, where the stocks come down and then it to a support, and then suppose I'm talking about long side. So the stock comes down and then it reverses to the upside, and that reversal is powerful. For instance, today I missed it It's the FedEx. So FedEx came to support on earnings, and then they bought it, and I think it almost broke the resistance, and FedEx will go higher. So FedEx is the one which um, you need to keep an eye on. I will keep an eye and get in because it's going higher towards 225. Now another one is, so when the stocks are breaking out in the morning or breaking down, then I put another strategy on top of it, which is opening range breakout strategy. You can read about it on Google. Just Google it, but I'll explain. Things are easy, reading is something, and then applying it and using it or fixing your trading system, how to use it is different thing. So I will explain opening range breakout in case you don't know. Say in the market, in the morning, suppose I have 150 stocks in the baskets I'm watching. So market is bullish. Out of 150, 50, 60s are moving up. So which one to look at? So I put a timer on my watch list for the stock to make a high on the 5 minutes interval. So if the stock is breaking the 5-minute interval, then they go into another basket. Then I put another timer for 15 minutes. If the stock is making a move above, it's making a new high on 15 minutes from the time the market open, then they come into another basket. Then I put another timer, 30 minutes. So let's say I have 150 stocks in today to watch, or 150. 50 are moving during first 5 minutes. Then during 15 minutes, like 10 stocks are still moving up. Then after 30 minutes, only 5 stocks are moving up. So those are the 5 stocks which I need to watch. So then you apply your analysis on those 5 stocks, identify the support and resistance level, potential, and then you get in. Or maybe if there's a news coming up, then you wait for the news to come at 7:30 Pacific, 1 hour gone, and then you see which stocks are still moving and moving with the volume. So you have to look at the volume also. If they are trading above average and they are breaking the 30-minute or 1 hour, then you get in. So that's opening range breakout strategy. Then another one is I use from time to time is gap up. The stock gaps up. I time the gap down. When the stock gaps down, I see if there's a further potential. Gap up reversal. If the stock gaps up and it's coming down, I hardly trade this. When the stock gaps up, if there's a big volume and the reversal is taking place, then I'm looking for reversal to the support level and then the stock going back up. A lot of traders, they short. As soon as the stock gaps up, they just short it. So that's their strategy. Unless the stock gaps up to a resistance level which I can clearly identify and I know that that's the top for the day, I try not to short. Let the stock comes down to the support level, and when it's reversing, then I get in. Then another strategy is gap down reversal. So gap down reversal I like. When the stock gaps down, most of the time it's gapping down to a support level, like 200-day moving average or 50-day moving average or some other support. When it does that, and then the buyer comes in, I watch these stocks and then I decide whether to take it or leave it. Like today, Bed and Bath Beyond gap down. So I was watching it to see if there is something I should look at, but I didn't find it. conviction, so I didn't go long. I didn't go short too, because it gapped down too much. So now it may just go sideways, so it will waste time. I have a trial offer for 2 weeks. You can try for $17. I have put the link in the chat box. So if you're interested, you can sign up for 2 weeks for $17. After that, you pay $107 instead of $127. So that's my advertisement. Okay, so here's the Apple chart. Apple, because of the iPhone 8 announcement, and they didn't like it. Usually that's what it does. When they announce, the Apple goes down for a few days, and then it goes back up. So today, Apple breached the 50-day moving average, and then it bounced back up and closed at 156.08. So it's just sitting at 50-day moving average. So what it does tomorrow, or if it holds today's low, or even if it goes tomorrow and sit on the 50-day moving average, then the next move should be up to the upside. There was a selling pressure today, so there was no doubt there was a selling pressure in Apple today, but it still is sitting at 50-day moving average. So something to look at to go long. Next one. Okay, so this one is Comcast chart. I'm watching it. I prepared this. I'm watching for Comcast to make its next move up. So I'll get in. So this is just on my watch list. So I tell you the reasons. You see this candle, the red candle, and after that these are my first warning for me to take a look at the stock. It may be reversing its pattern. So after this downfall, there's a big move down. I have these two white candles, so it looks like there are buyers, and this is the support at 36.50, and then this tried to move up, then it came down. So tomorrow, if I see some volume and it starts to move up, it could go up, and my stop is below 36. So I know my stop right here. This is the low, and it's at 37.30. So not that much far from the support. So this is just on my watch list. Nothing else. FedEx, yeah. So this chart, you see, FedEx. Sometimes you have to watch. I mean, most of the time, all the time, for earnings announcement or some event. When the event occurs, then you have to watch the pre-market or aftermarket action. Most of the time during earning, the low or high is made during pre-market or aftermarket. So they didn't like the FedEx. I was listening to the news that there was in Ukraine, there was a cyber attack on FedEx, so they didn't they didn't like it. They sold it, but then others liked it, and they didn't care. They thought it's just one time event, and they were buying it. I missed it. I hesitated. So FedEx, any pullback to this level, like 217.50 to 18, I will get in, and it's going here. See, there's a white space. So if you extend this line, it's like 230, 237. So FedEx is going higher. So this is on my watch list. Home Depot. So Home Depot, you look at this candle. I'm long on Home Depot already. So today was a bullish candle, and I expect the continuation to the upside on Home Depot. So this is another stock which you need to get in when you see in the morning going up. IBM. I'm long on IBM too. This chart is prepared on 11th of September. So I'll show you today's chart. You see IBM was sitting at below 50-day moving average, and then look at what happened. It crossed, and then it came down and sat on 50 days. So 50-day moving average acts as support, some magic. So there is a magic to 50-day moving average and 200-day simple moving average. So today IBM was moving, so I bought more IBM, and I would sell somewhere here when this gap is filled. I'll sell here. So 150 level, and it's at 145.67 when I took this screenshot. McDonald, another one I'm long is McDonald. So if you look at this chart, it's holding this support line, and again the 50-day moving average, right? So I mean, if you look at this, and let's say you don't know which stock is this, is it McDonald or it's cat, dog, what? You have to, if somebody asks you, will you go short or will you go long? I mean, you should be saying, I will go long, because you will say, okay, it's holding this support line. There is a 50-day moving average. Then if I draw this line from the resistance, there is a big support in 155, and if it breaks this resistance above 162.50, then McDonald can go up. So I'm willing to put more my money into going long than going short. That's a simple way of saying it. So I'm long on McDonald. So tomorrow you can go long on McDonald if you see it going, it's going to go up. Free tips. Wynn Resort. You see Wynn is consolidating on the sign. So I took the screenshot on 19th. I think today it went down, but it's an uptrend, and it should be going up. So this is, we traded Wynn somewhere here and got out. Then it went into consolidation. You see, the stock gives you, if you are doing swing trading, then the same stocks keep giving you the opportunity. So you get out after 3 days or 5 days or 2 days, whatever, when the move comes. Sometimes the stock pops up suddenly. You are in a position and then it boom, 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 boom. So instead of buying, you need to sell. Like yesterday, WDC. So we were already long, and then yesterday it started going up crazy. So we were up $200 per contract. So I received an email from one of my members. I think he's attending this webinar. He said, should I buy it? He was not in it. So I said, no, it's too late now. So we sold. And today, WDC is down. So if you're in a position and the stock is moving 3-4 points from the low, then you should be getting out. Because the move, two things happen. If you look at the option chain, there are traders who are not in the position, they are chasing it. So they are chasing it, the volatility is going up, the spread is crazy. So yesterday the spread was like $6 bid, $7 ask, and we bought it at 430 2-3 days ago. So we bought at 430. When the WDC was moving, the bid was at 6, ask was at 7. So let's say you want to chase it and you buy at 7, you're instantly losing $1. Then after you buy, volatility go down, that's $6 bid will become $5. Your ask, which you paid 7, will be at 6, and then the stock next day tanks 4 or 5 points, then your $7 become $2 overnight. So when you're already in the position, somebody wants the spread is 1 point wide, you sell it at 650, 640. So I sold at 640, 650. And I send the alert also to sell 640, 650. So don't be greedy to sell at like 680. Don't try, because you bought it at 430. Let someone have it from you at 650. So they are happy to have those options from you at 650, because they are seeing ask at 7 and they are getting it from you at 650. They will gobble up. So let them gobble your options. So 430, you sell at 650, you're out. Let them have the another whatever run is left. So, and then you look it again. So I don't forget that stock after I get out. I don't forget that. I that stock is still in my watch list. So if I'm out of that position, it doesn't mean that it disappeared from my watch list, unless dramatically the move happens so much that the trend has changed, or the stock is no longer has gone into choppy mode. So at that time, it gets removed from my watch list. Otherwise, it stays in the watch list, and it will give another opportunity to go long. So same thing with Win. So Win, after we got in, I don't know the date, but we got in somewhere here, and we got out here or here, somewhere here. We made very good money. Then it went on consolidation, so I kept watching. So I'm long on Win. CTRP, you see, this is a gap down trade. So I have a member here, John, my friend who just lives very close to my house. I told him to go long on CTRP. You see this gap down? I bought shares, he bought shares. I also buy shares, so $50.39. That was our buy price on CTRP shares. You see it gap down. So if you look at this trend line, this is the support. This is the support. So if it gaps down and it breaches, you have to think like this. When the stock gaps down, you have to start looking towards the left side. On the left side, where can you see? Where you have to think from the other trader's point of view, not your point of view. You think, okay, the stock gap down, I go short it or buy put. But you have to say, okay, I'm fighting with a lot of big guys. Am I on the right side with them, or am I gonna be on the wrong side? What the other guy is looking at, which I'm not looking at, what he is planning to do, like counter attack. So if you look at a CTRP chart, then you say, damn, it's breaking it, but the guy may be looking at this support, so it's breached. Should I buy? And it's high volume. Should I buy puts? Should I short it? Maybe he will come. So they start coming, right? They start coming and they start buying slow, slow, slow. But if you're short, you start losing money slow, slow, slow. Next day you say, okay, I will hold it. It will come down. But no, it they have deep pocket. They will come and they will get it, and you will lose. So you have to evaluate on the left side. So I send the alert. I said buy CTR. I think I send alert to all members that CTRP has bottomed, and if you want to buy it, 50.39. And since then CTRP is going up. So I show you the chart. You see what happened? Boom, 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 boom. So this, yeah, okay, yes. Look at this candle, right? 31st August, 11:37 a.m. This is where I spotted CTRP. So I send the alert about the shares, took the screenshot. Actually, I don't take the screenshot. I tell someone to take the screenshot for me. I just say, take the screenshot, and then he does the rest. So, so I took this screenshot, and then same day, 31st of August, Sorry, what happened here? 31st of August. Okay. Then I took again on 18th of September. So 31st of August, this is the candle, right? You see how it built up? So if those who shorted, they were losing money the same day. So it stopped right here at 52. So we were making money. Then the game is over for the shorts. So CTRP, now when you see this candle, then look for the opportunity to go long if you miss this initial move. So this side, you need to start dipping more, buy more. So then I sent alert to buy calls. And you see on 82 days ago, it went to 54, this bullish candle. And today it was moving up more suddenly in the morning. There was some news. When the stock market open and then one stock starts going up crazy, there is somebody who wants to get in. So the CTRP, if you're not into CTRP, take a look. If it crosses 50 days going up, I'm already in CTRP. $50.39 cost. And you see where it is. Yeah, I think it's above 54 now. It's going higher. So that's the way professionals make money. So that's what I was talking about. JPM, so this chart is kind of tiny candles, but and I prepared on 11th of September. So we went long on JPM and look at the price, 89.83. I think that's the price. 200-day moving average. So if you see this stock gaps up a little bit, and then JPM, then you can also look at other financials and see what they are doing. Is it the only stock in financial which is going up, or there are other stocks also going up like Morgan Stanley, MS, Berkshire Hathaway, Citigroup? If all these 4 or 5 stocks are simultaneously moving up, professionals are getting in. They expect something, right? So what that something is, if you have the research department or if you know the fundamentals, then you can say, like today was the FOMC day, financials were moving again today, so they were expecting positive news for the financial. So if you don't know the news, you just know that this gapped up. My risk, where is my risk? The risk is below this 200-day moving average. That's my risk. So that's not bad, right? It's rising, trending, 200-day moving average. If I'm wrong, below 87, I'll get out. Otherwise, the sky is the limit. And look at this. What happened to JPM? So we made money on the calls. You see that? So that's the way they come in. You don't need indicators. Do you see any indicator here? Nothing, right? This RSI, I mean, it's by default is on a stock chart. I'll tell him to remove this also. So don't, this just by default. So you see common sense trading, boom, 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 boom. And I think it's we got out at here, 94. Today it was moving across this. So here is your resistance. So if you look at this candle, this is your resistance. So if it crossed GPM, I think today was crossing this level. So I will be interested again. And I bought and send alert to. When I say I bought, I mean I bought and my members bought. I send alert. So Citigroup. So we bought Citigroup also and made money. Because when you spot one stock, then you say, okay, what is the other stock in the same category I may buy, but not more than 2 in the same category, because if something happens, then you will start losing in both stocks, because all of them are going down. So no more than 2. So I looked at Citigroup and I said, yeah, this one is also looking good, so I buy that too. So I bought Citigroup also. So you can see that. Oh yes, so this is what today's chart on 20th September, 1:17 p.m. So you see JPM crossing, so this is the resistance. So next a leg up, so it's going towards 100. when the stock is close to another secret I give you. When the stock is near 94, 95, it means it's going to 100. It's like when you cross the age of 80, 82, it means you will live 90. If you are 90, you will live 95. If you are 95, it means you can live 100. So if the stock is near 94, it means it can go to 100. So chances are, if the stock is near 72, 71, then chances are it can go to 75. So back of your head, you say like that, oh, it's at 94.50, so it can go to 100. Let me go and buy some JP Morgan. Now she said it will go up. Okay, so this is Halliburton chart. So this is what I saw. And not only this, I saw the crude, I saw other crude stock like EOG, SLB, CVX. So I cannot buy all crude stocks, right? Only can buy one or two. So October 45 calls for 25 cents. Today they were trading at 50 cents and above, so 100% profit. So this is what I saw on 13th of September. So when you're looking at crude, then you have to also look at other stocks in the crude, what they are doing. So you have to be ready with your basket of crude stocks. So I'm ready with the basket of crude stocks. I have a list of the top crude stocks, and when they move, they move. Baba, so this is another stock which we trade, and we always make money. So this is one of the Chinese stocks. So there are, if somebody asks you, like there was in the Facebook group, somebody said, oh, I never trade Chinese stock, there you guys are too high risk taker. So I said, what? High risk taker? I love Chinese stocks. Baba, Baidu, Sina, NTL, YY. Then he said, okay, what are that? So I said, okay, these are the 7, 8 stocks, Chinese stock. You always need to watch. If you look at the top 10 stocks of the world outside of US, 7 are Chinese stocks. So why you wouldn't trade Chinese stocks, right? If the top out of 10, top 10 stocks of the world, 7 are Chinese. So just because they are Chinese doesn't mean you don't trade. So you trade Baidu, Sina, Baba, YY, Bezun, and EDU, TAL, NTES. So this is another basket of stock you need to make and call it Chinese stocks, and then see which Chinese stocks are moving. If they are moving, sometimes they move all in tandem. Like they're all moving up, they're all going down. So you watch Chinese stock and then get in. So Baba is the one, and Jim channels keep coming on CNBC. He's shorting it and it keep going up. Does it look like the stock going down? When you see the trend like this from the left, like from 90, 80, all the way like this, boom, 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 boom. It doesn't look like shorting to me. So he's shorting it, but it keeps going up. It will go to 200. So Baba, I made this chart of 13 September. We traded puts also here on this. We made money on when it was like this. So it was a quick one. And so we went long. We sold it. I think I made this chart on September, and then we sold it, took the gains. Okay, this Burlington chart. So Burlington, you see this 50-day moving average? So it's nicely like a, sometimes the 50-day moving average is like a giant hand. So when you see a giant hand like this, like holding it, what is it telling you? That there is a support at 50-day moving average. So this is the common sense, the Burlington. So this giant hand, see, it was declining, now it's flat, and it's holding all these tiny candles. This one is telling you that it's going up. Oh yeah, see, it went up on 13th September. Let me see. On 12th of September, it was like this. 13th of September, it's like this. C, yeah. So this is what I was. So we went long on C at this. So this is another pattern. If you understand it, you see the C tried to go up, then it pulled back. Then next day, when the candle is forming like this in relationship to the previous day candle, this is a bullish sign. So you need to go long, and it's trying to penetrate the 50-day moving average. And another thing is there are other financial stocks which were moving same day. So when the same day the other financial stocks are moving and you see this pattern, then you have to go long. So we went long on C also. Oh, see, where is it? 71.33, 67.32. So from 67 to 71, 4-point move in C in few days. From here, 1, 2, 3, 4, 5, 6, 7, 7 days. So 7 trading days, 4 points. When you translate into option, it's like mucho money. Netflix, we trade Netflix often, and Netflix is going up. It's not this. It doesn't look like a stock which is going down. This is a daily chart. If you look at the weekly chart, it's not going down. It's going up. Walmart, yeah. So this is another. I think we bought it on 5th of September. When I saw this candle, I bought Walmart and I sent alert along with Dollar General. So Dollar General and Walmart, they were the only one in my basket. They were going up. The stock market was down 230, 40 points that day on 5th of September. So when the stock market is down and something is happening, because Walmart, there was a news which was positive for Walmart in relationship to Amazon and Whole Food, because they are fighting with Amazon. So this was the candle. So I went long and we got out here, made money on Walmart and Dollar General also. Same, both of them were moving up same day. See, it's holding. Today I took this chart again. It's holding this support line. So when the stock touches the support line, so you need to be able to draw the support line, right? So once you draw the support line, suppose you figure it out, then you say, okay, it needs to touch 3 times. If it's touching 3 times, then and it's holding it, chances are that it's holding it, it's gonna go up. So it should be going up. Walmart looks like it's gonna go up. Okay, I think this was another last just. So I have a coaching program for 6 months. I have designed it for 6 months. If you're interested, send me email. You have my email on the screen, and it's a 40-minute strategy session. We talked about it, and the talk goes for 40 minutes. Then if you like, you can register for the 6-month coaching program. Let me see what I have after this. Okay, so I have a 2-week trial for $17. I put it in the chat window, and I will give you a trial. I have another presentation, so don't start leaving. I'll show you the conditional order. That's another bonus presentation. Let me ask you, not ask you, answer question. So yes, I'm drinking mango juice. I already answered. EFX is should be going up. Somebody asked if we do. He left already. Long time. He asked one question. I haven't answered yet. He's left. He didn't have the patience. He said, "Do you use a spread strategy?" Yeah, I use spread strategy. What another question? WDC recovered. Okay, I'll take a look into it tomorrow. NVDA chart, I did not prepare MDA chart, James. It's a long, it's going to 200. So you can write down the target. $200 for NVDA is going there. Do not listen to anyone. Uh, I don't know what morning or night you're asking. Man, that means I'm gonna go to 120. I don't know what man I wanna go to 120. So, okay, thank you. Do you use any stock option screener? I have my own in TradeStation. Shan is asking, do you think Baba is going down? I don't know Baba is going down or going up. When it's gonna go up, it will tell me and I will buy it. I think it's at 176, 177. I'll buy between 174, 175, but it has to say, right, in the chart. So you are my member, you will receive the alert, Shan. MU is, okay, so MU, I know the MU. MU is breaking out. We bought MU at 28, sold at 31, 32. We made money, and then I did not look at it. It's overbought. It's at 34, 35, and it's breaking out. So it could go to 37, 38. So MU is a good one. What else? Do you use? Yeah, I answered. Okay, that's it. So I start another session. Okay, thank you, Bruce. Short-term opinion 1 month for NVDA. Short-term opinion 1 month, I don't know, is going to 200. Thank you. So I'll look into a MOS chart. Sometimes the stock has not come into my radar for even month, like MOS. So when they don't come, then I don't trade and I don't even focus. I don't try to look. So I don't know what Moss is doing right now. So I'll see. So CF is going up. So if you're looking at into agricultural category, look at CF. CF is the one good one. Okay. So I start this next presentation, which will go another 20 minutes. It is about conditional order. And if you trade options, you should know about conditional order. Okay, so so understanding conditional order. So I'll explain why you should be using conditional order. Okay, so the reason to use conditional order is to eliminate greed and enforce discipline. And the third one I should put is when you don't have time or you cannot monitor your trade, during trading hours because you're busy, you're traveling, you work, so you just cannot monitor. So you want to set your sell order in advance, sell order or stop order. So the problem with option trading is you buy option by 2 and then you don't know at what price to sell, because option price depends on the stock. We are not looking at the chart of option, right? When we are trading option, we are looking at the chart of a stock. So the analysis you have done is on the stock, and your stock is telling you the exit or entry, and then you're using option. So when you're exiting, suppose you know the target 100, what your option price would be when the stock hits 100, you can take a guess just by multiplying delta, but that's not accurate because the time decay and volatility and other things can change. So you don't know the option price. So if you don't know the option price, but you know at this stock price I'm gonna sell, you can put the conditional order and let the stock, when the stock hits your target, your option is sold. So like for instance, the WDC yesterday was moving, it hit the target yellow. I provide green, yellow and red target. So it hit the yellow target, and the yellow target is the important one. So if you're in the trade and you don't have time, you can set the conditional order to sell WDC. When the stock hits my yellow target, sell all my options. So then what happens is when the stock is moving up like crazy, we tend to cancel our sell order. We cancel it, and then we see the stock reversing, and the option volatility dies. The spread is, nobody's, those who wanted to buy, they already bought. There's no buyers left. So now the option which you could have sold at $6.50 is now at $5. So you lost $1.50 per contract. If you have 5 contracts, you lost $750. So greed kicks in. So to eliminate greed and enforce discipline, the conditional order is a good one. So I'll show you how you can set it up. I've been using conditional order for 6-7 years. I don't think even at that time when I discovered it, people didn't even know, and they were not even talking about it. Now some people talk about it. So let's say you're bullish on Apple, and the current price of Apple is $150, and the target price is $155. So you bought July 150 call. So you bought July 150 call and you paid $3, right? So remember this scenario. So there are 3 ways to sell your Apple call. You have a profit objective. A lot of traders have a profit objective. What they do is they say, okay, I will sell my average, I make 40%. So if you know you on average trade, you make 40%, you can set the sell order at 40% profit. So set the sell order at $4.20 because $3 you bought, 40% is $4.20. You set the sell order good till cancel at $4.20 and let it hit. It can go to $4.10, your order is still there, and now the option could be trading at $2. So you take this risk. Or it can go to 5 and you got sold at 4.20. So this can happen also. Another way of selling your option is when the stock hits the target, right? So this is the way I sell. Number 2. So I watch stocks, and when the stock hits the target, then whatever the price of the option, I sell it because I'm watching the market, so I can sell manually. But even then, I sometimes put the conditional order. So when the stock hits the target of 155, you can set the sell order at, suppose, 5. You calculated, okay, when the stock hits 155, the option will be selling at $5. So instead of putting the sell order at 4.20, based on your 40% objective, you calculated option price $5. So you can set the sell order in advance at $5. Or if you're watching your stock, you can sell when the Apple hits 155. I think I need to prepare a new scenario because Apple is trading way above 155. So set the sell order at 5. So this is the 3 ways, right? Now there are flaws in this method. So profit objective of 40% may not hit. So you have the profit objective of 40%, but the stock and option don't know that you have the profit objective of 40%. It may go to 35 and then it goes to 10% and then you start losing. So this may not work. If you are calculating based on option price based on target price, it cannot be accurate because of the variables in the option calculation of the option price. So when you're calculating, you're estimating your option price, you have to be conservative on the conservative side, and then also need to take care of the spread. So spread and be on the conservative side, then you set the option price target. Or the third is selling option when the stock reaches target. When the stock is reaching target, then we tend to lose discipline, and the greed kicks in, right? So when the greed kicks in, we change the sell order, we don't sell, and then we see the stock retracing. It happens all the time. I'm talking right now as if I follow this religiously. I don't, because there is a greed always kicks in when the stock is hitting the target and we are seeing green. We think, okay, it will go up more and then we'll make more money. Sometimes it goes up, we sell early, but most of the time it doesn't go up, it comes down and we start losing the profit. So not good. So what we need? So we need a method where stock hits the target, option sold or gets sold automatically. So it will remove greed, it will enforce discipline, and it will free up the time to trade other things, right? So if you set the sell order based on the conditional order, then you can take a look at other positions or do your thing, look at other candidates to trade, many things you can do, so you're not tied up, and it enforces discipline. So benefits of conditional order is set and forget strategy. So you set and forget. You set one time and then you forget. Conditional order puts money in our account automatically. So when the stock hits the target, it gets sold, option gets sold, and money comes in our account. It removes greed, it enforces discipline, and you can take your dog for the walk. Because when you're taking the dog for a walk, that's when the stock will move. It finds out you're outside taking your dog, or when you go make the coffee, that's when the stock moves. So how conditional order works? This is what you are actually saying. The sell my Apple call contract at market price when Apple stock price is equal to or greater than 155. So you're telling the in your platform, you're saying, okay, sell my Apple call when the stock Apple price reaches 155 or greater than 155, sell it at market. So whatever is the market price, sell it. So when the 155 Apple hits 155, whatever is the market price of the option at that time, that's what you will get it. So sometime you may get the price which you may not like, but when this is the pros and cons, but at least you are out and you made money. So if it goes to 155, you think, okay, it will go to 160, and then you hold it and it comes down to 150. So this will not happen if you set the conditional order. So points to consider: order is set at market, not at limit. So you're selling option whatever is the market price. You're not selling option based on the limit price, because that your limit may not hit when the stock reaches 155. For calls, you have to set greater than or equal to condition. So greater than or equal to condition. So because the stock jumps up above 155, then it's greater than. Or if the stock goes slowly like 154, 154.50, 154.70, that's, and then it hits 155, you're out. Less than or equal to condition is set for puts. So if you think the stock is going down, then it's less than or equal to. And in the beginning, when you're setting up this conditional order, you have to test with one contract, because you may end up doing some mistake. So test it out with just one contract and then watch it, see, set some funny numbers. Suppose Apple is trading at whatever is 155, 156. Set the order. If you hold the call, set the order, okay, I'll sell it when 200, and see 200, okay, nothing will happen because Apple is not trading at 200, right? So your order should be sitting there. Then you change it. Suppose your target is 162, then you say, okay, from 200 I change it to 162 and see if nothing, I messed up. If your order is there, maybe you want to call your broker and see if you have set it up correctly. Ask him to walk you through, and then you will be professional. So conditional order for puts: So suppose you are bearish on Apple, current price is 150, target is 145, you bought 150 put, you paid $3. This is the scenario. So setting conditional order for put. So sell my Apple put contract at market price, say at market price, not limit price, at market price. When Apple stock price is equal to or less than 145. So you have to make this condition equal to or less than 145. Two things to watch in the conditional order: at market price and equal to or less than 145. Don't put equal to. If you put only equal to, and if the stock gaps down, then there's no equal, right? There's no 145. It's like 144 and your order is sitting there. And then you wonder what happened, why I'm not sold, because you just put equal to. You have to put less than also for puts and greater than also for calls to cover everything. Oh, the slide did not, no, what happened? Is that the end? No, it didn't end here. I think put, yeah, the setting, okay, that's it. Yeah, that's all you need to know. So I'll go over. So this is the put. Yeah, it's taco time. I have some taco. I'll put it in the in the oven. Let me tell you the benefits again. Let me go over. So we talk objectives. So you understand now, if you use conditional order, it will eliminate greed and discipline. You will see, or you will be more relaxed. If you use conditional order, you will start getting relaxed, and you will see automatically your orders are getting sold. You have no greed factor, no panic factor, and money coming in. So try using it. Just remember the points. There were points I mentioned. Let me go one by one. You need to know this points to consider. Yeah, this. So this is important. Order is set and market, not limit. So remember this: market price and greater than or equal to condition, and less than or equal to condition. Now, Bruce asked, what do you do if it goes against you and you have conditional order? Well, if you have only one side conditional order, only to sell at for profit, then your order will not hit, right? Because suppose you bought Apple for target 155, it's trading at 150, it starts coming down, trading at 150, your profit target will not hit. So you can set a bracket order, another condition in the conditional order. And I will make another slide next time. Good point. So there is another condition, or if the Apple goes to this price, so that's your stop price, sell my option at market price. So whatever happens, either or, up to the upside or to the downside, your contract will be sold. So you can set the condition or. So you ask the broker for or condition in your platform. So in TradeStation, if you use TradeStation, I use TradeStation, it's called activation rule. I know Thinkorswim has, I know Option Express has, I know Interactive Broker has. I use TradeStation. It has, yeah, one cancels the other, but this is not one cancels the other. It is like one cancels the other, but because you're setting the conditional order, so there is a big or sign. So you in trades, if you have TradeStation, you see, click the checkbox called activation rule and set or condition for the downside. So you are covered on both sides. So if it goes up, goes down, you're out. So in this way, you can do other things. You're covered on both sides. And So conditional order I set in case I'm away. So suppose I'm traveling, right? So suppose I know I'm gonna be out of market tomorrow. I won't be. So at night time I'm setting all the conditional order, and that's it. And then on my iPhone I can check, or on my iPad I can check all the stock codes, and I know that okay, this is trading at this. This is what happened. You can even set the alert, email alert, when your order is, you know, hit your target. You get the alert. So ask your broker and use this conditional order and see, and test it on one contract and one trade first, and then, because what could happen is if you set it wrong, you're immediately out of the position, so you may lose money. So take it slow. Any other question? So there's no other question. It's 1 hour, more than 1 hour. Thank you very much. And next webinar will be not this Sunday, next Sunday. So this Sunday there's no webinar because I already held it. So I'm preparing one big topic on ETF. It's taking me long because I'm trying to cover a lot of things. So I will try to cover ETF. So we trade ETF and we don't know anything about ETF. We just trade it. So I will teach you. And when you're teaching, you're learning also. So if you want to learn something, start teaching somebody. Find someone to teach. Thank you. Bye.